Hello everyone, this is Matthew Frailey with BreakpointTrades.com. As you know, markets had a nice two-day rally. First off, on Monday, discussed that the McClellan oscillator system gave a buy signal. It closed below its lower Bollinger Bands, and that ended up being a nice buy signal. By the way, whenever the McClellan oscillator closes below its lower Bollinger Bands, that's generally a great mean reversion trade at least, and we had that occur on Monday. Secondly, on Tuesday, the VIX volatility index closed back inside its upper Bollinger Bands after being outside its Bollinger Bands on Monday. That also gave a great trade. These are some of the mean reversion systems. And of course, our amazing KISS systems have continued to produce amazing trades, as you can see, and these are live trades. They are not back tested, and our subscribers get notified via SMS text messages. Again, my name is Matthew Frailey. I founded Breakpoint Trades 21 years ago in 2003 to provide the best technical analysis on the planet, as well as actionable trade ideas, market analysis, and my personal passion developing these advanced mechanical trading systems. We have 21 SPY and ES mean reversion systems. We have our KISS systems, and I'm soon going to launch 12 more systems, our volatility systems. Okay, so let's go ahead and get back to this video market newsletter analysis at hand. This is our back-end recorder for our website subscription service, which if you're just a YouTube subscriber, you should honestly consider subscribing so you can get access to all of our stuff, all of our systems, etc. So I'm going to go ahead and get this recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, October 9th newsletter. By the way, our thoughts and prayers go out to those of you in Florida. We actually have quite a few friends, Steve, I know in particular, in the Tampa area. Very sad situation, and we just had a big hurricane come before, which went up also well into the U.S., North Carolina, Tennessee. Unbelievable the videos I've been watching with the floods. But anyway, the hurricane today is supposed to hit, so let's see how that develops. And anyway, let's get back to the newsletter here. So again, it is Wednesday, October 9th, and this is our comprehensive general market newsletter on the general market. We cover that. We look at our systems. We look at the major indexes in a top-down approach. We look at the VIX, a couple indicators. We'll look at the bond market. We'll review a few major market sectors. We'll review the dollar, which has had a big rally, guys, since we pointed out the divergent low a couple weeks back. Bitcoin continues to sell off. All right. And some of the commodities, and especially the precious metals areas, have been weak. And again, as far as the market, like I said, long-term uptrend, intermediate uptrend, short-term uptrend. Today, the S&P 500 made a new all-time high. Again, clearly that McClellan oscillator buy signal on Monday and the VIX Bollinger Band buy signal on Tuesday gave excellent trades. Now, all eyes are on the CPI data tomorrow on Thursday. That's the big one, inflation data. And then, of course, on Friday, we have the PPI. That's the producer inflation data. And also, we have the banks starting to report earnings this week. And I actually put out a few ETFs in the bank and financial sector today. All those rallied for my morning post. Again, that's another reason to be a subscriber. You could have saw that instead of listening to it after the fact on YouTube. But we'll see how the market reacts tomorrow. And again, as far as the CPI data, like I said, quite honestly, guys, and I don't want to get political here, but I really don't trust any of this economic data before the election. I mean, it's pretty obvious that the government screws with the data. I mean, just think about the jobs data report, the unemployment report. The last 10 out of 11 have been revised down. Now, how is that possible? So I don't even know why the market really reacts on that day when it's just going to be revised later on. But again, we'll see what the CPI numbers look like tomorrow, and let's go and move on. So first image below, item number 2, here is the VIX volatility system. You all know the VIX, okay? Again, this is the VIX Bollinger Band buy signal, just a very simple system. but it has it's profitable. It has a profit factor of about 2.7. So the signals are whenever the VIX closes outside its upper Bollinger Bands and then closes back inside, that gives you buy signals. And when it closes below the lower Bollinger Bands and back inside, which we haven't really seen any of that in quite a long time, you get a sell signal. But you can see these nice trades. This also occurred on Tuesday, which we pointed out, and we had a nice rally today. Next, image number 3. Here is the S&P McClellan Oscillator. I pointed this one out on Monday. It had closed below its lower Bollinger Bands. Now, sometimes you need 2 or 3 days, but generally this is a great, at least mean reversion system. And you can see I put arrows on the pressed, and those all produced bounce. Sometimes they just produced a 1 or 2 day bounce on a downtrend, and sometimes they caught major bottoms. So this went on a buy on Monday, and we've had a nice rally on Tuesday and Wednesday. Need to put an arrow on the chart there. And image number 4, here's some of these mean reversion type systems. So first off, the VIX S&P Bollinger Band system, which I just discussed above. You can see the nice trades here. And these other systems, these are what I call volatility systems. They're based on volatility instruments. You had Amazon. It had taken a first entry, which ended up being a small loser, a second entry, which made money. That closed out today. Goldman Sachs went long yesterday, closed out today for a winning trade. USO had a nice winning trade the previous week, and it went back long today. These volatility systems, I have 12 of them. I show them periodically on our trading community. At this time, we don't officially send out trade notifications for these, but once we completely finish all the little iterations of the KISS systems that we've been working on, I'm going to add these 12 volatility systems to the website. So think about it, guys. We're going to have 12 volatility systems. And by the way, those 12 volatility systems do about 100 trades a year. So they're quite active. And that's even in bull markets when mean reversion systems are usually not very active. Okay, so we'll have that. Of course, we'll have the 21 SPY and ES mean reversion systems that we've always had. And of course, the KISS systems. So a lot of systems here at Breakpoint Trades. And those are good fits for those of you who, you just want to follow something. You don't want to interpret a chart and stuff like that. Again, we have all walks of life traders at Breakpoint Trades. We have day traders. We have folks looking for market analysis, trade ideas, and we have guys that literally are here only to trade the systems. And of course, subscribers who do both. So really depends on what you want, but we have something for everything. Everyone, I mean. All right, and moving on. This slide here got out of order. I apologize. This is an example of the text messages you receive in the high performance KISS systems for those of you who had signed up for the KISS systems or have not done so. And as far as the high performance KISS systems, like I said, eventually down the road we're going to try to add auto trade service for those of you who want the systems automatically traded for you. But let's go and move back to the general market newsletter. Don't want to dwell on this right now too much. So I'm in image number 7. Here's the index sector table, what transpired today. Again, you can see the gains for the major indexes. Dow was up 1%, S&P up 0.7%, NASDAQ up 0.6%. The Russell continues to struggle, up 0.2%, down 0.5% for the week, while the others are up. The 10-year Treasury yield has been rallying quite a bit, and that has not helped the Russell. But I still think if the market doesn't fall out of bed here, that the Russell could eventually play catch-up here. But we'll get back to that. Now, it's funny, as far as the 21 market sectors, the majority were up today. Looks like 4 sectors were slightly down. Most of the moves were fairly small. The strongest sector today were the banks, which I gave some trade ideas out this morning, and I'm going to show them again tonight. Healthcare had a great day, technology and semiconductors. Currency-wise, US dollar continues that rally, up yet another 0.4%, up 0.5% for the week already. And remember, it was up all last week, so it's had a really good rally off the lows. Cryptocurrencies, despite the market rallying, and usually Bitcoin likes to follow the market, especially the NASDAQ, it has been down this week. It was down 2.8% today, down 3.9% for the week. And as far as commodities, mostly to the downside here. DBC, the index, down 0.85%, crude oil down 0.7%, natural gas down 2.5%, down almost 11% for the week. So big crash there. Copper down, uranium, really not a lot up here. And the precious metals, that rally in dollar finally starting to put a little nail in that. Gold down 0.5%, same for silver, and GDX down 0.5% as well. Pretty nice losses here as well. And we'll see if that continues. That area could definitely use a correction. It would be a correction in a bull market, of course. But we'll get to that below. And as far as the bond market, we continue to see a rally in the 10-year, 30-year Treasury yield, up strong yet again this week. And the yield curve, it's 1.01. It's fallen from the recent highs of 1.05, but it's still in an, no longer in an inverted state. And item number 8 is the economic news calendar. Like I said, all eyes tomorrow on the CPI inflation data. Otherwise, we have the initial jobless claims as well and the natural gas inventories. And of course, the PPI producer price index inflation data on Friday. All right, let's jump to the charts. First chart below, item number 9, here's NVIDIA, just because I've been showing this as one of the first charts lately. So first off, this bullish triangle that I've been showing obviously is playing out. Remember, I've had this labeled as an A, B, C, D, E. By the way, triangles, guys, are 5 waves, true coil patterns. Remember, breakpoint trades were also about teaching technical analysis, and just watching us, you'll learn a lot of this technical analysis over time just looking at our charts. But again, true coils are 5 waves, and this was the bullish way to label it. I talked about that being a higher low wave E. And so far, that's played out. You can see it's still in a little supply zone. We'll see if it can bust out through there. But so far, so good. Moving to the major indexes, chart number 10, here's the 5 key major indexes just for the simple Bollinger Bands. Again, S&P made a new all-time high. The Dow is basically right at its highs, little double top area. NASDAQ, nice day. Again, it still hasn't taken out its July highs. And the Russell just continues to lag here, going sideways. But again, if the market still holds up here, I think the Russell could maybe start to outperform sometime soon. We'll likely need to see a pullback in the 10-year Treasury yield. One thing I'm noticing here is the Bollinger Bands are starting to pinch here on the dailies. And so, we'll usually that precedes some sort of bigger move. Next, image number 11, here's the daily S&P 500 KISS system. This is the KISS high performance system, by the way. It's in the high performance system section. And remember, we had that DeMark 913 combo a couple weeks ago, and it produced a little pullback, right? Just a little one. We still were well above the ATR, well above the smart trailing stop, and of course, rally today made a new all-time high. The KISS system, again, you can see how the KISS system is traded here. And this is all live, all real, no back testing. You can see how it's done. It's done very well. Got out there in July, got back in early August, lower than where it got out of, and it's been long this entire time. Current stop is 54.92. Okay. Another thing I pointed out is the moving average ribbon. You got the 4 moving averages. I use the 9, 20, 34, and 50 EMAs, and then I use our custom BPTMA Deluxe. And this turns green and red with the slope. So it was pinching into the ribbon. That's almost always a great buy signal. And you can see that's playing out. Chart number 12, here's the 4 time frames. Again, we already looked at the daily up here. Again, we're above the ATR on all these time frames now. Well, except I guess the 130 minute, which we're right at. One thing that stands out a little bit, we have an end of bull cycle there. So we'll see. Again, it all depends on the CPI, market's reaction to the CPI tomorrow morning. Next, moving on to the S&P 500 charts. Here's the S&P chart, just showing it the weekly charts up 0.7%. Okay, still in this long-term uptrend channel. Again, we have these divergences we're monitoring. Remember, divergences are not a sell signal on their own, but we are keeping an eye on them. Chart number 14, here's the daily chart. Again, guys, we've been showing these charts for the last couple of weeks, so no changes here. This is one scenario working on a wave C of 5 in this leading diagonal type pattern. Chart number 15, here's another chart showing you the same similar count. This would be a wave under this one, you'd have a wave 3 here that we're working on. Chart number 16, here's a clean, simple daily view of the S&P. Remember I talked about this area being a support zone, right? From the July highs to the highs there in August, and you can see price came down, bounced right off of it, and also off this 20-day moving average. Again, the super bullish view here would be this is a wave 3. Okay, we'll see if that ends up playing out. Here's another education, guys. Again, most of you know this, but if you're new, you may not. So wave 4 pullbacks, which what we clearly had from the July to the August lows was a wave 4. It was 3 waves. Okay, that's always a reflexive pullback in an uptrend. 3 waves was just absolute textbook. Next, number 17. Here's the S&P with these cycles. I discussed this as well on Monday. So I have 2 cycles here, the shorter one and the larger one, and price has been responding to these fairly well. One thing I'm noticing is both the larger cycle and the smaller one, notice how they both converge right in early November. So that appears to be some sort of timing. Now, is that a timing for a high or a low? Well, for now, it looks like maybe it'd be a high, but we'll see. That's still, 3 plus weeks away. Chart number 18, here's a 2-hour view. So again, here's one way to label this. That last pullback was a wave 2, and we're now up in a 3. Then eventually get a little 4, and then a 5 up. You can see how the moving average ribbon pinched there. By the way, we didn't fill that open gap below. That was one possibility, but we did not fill that. Chart number 19, here's a 30-minute chart. And this is the labeling that Steve had put on the weekend, and this ended up playing out. He had that pullback into that gap, which didn't fill as a wave 4. And that ended up being a correctus today. We made a new high, so we're clearly working on this wave 5. By the way, guys, just short term, we do have 5 waves up. So this could be wave, this could complete the 5, or it could be wave, wave 1 up of 5. But notice you got 5 small individual waves here. 1, 2, 3, 4, 5. So anytime I see 5 waves, I want to take notice. And so we could perhaps have at least, even under a bullish case, have a little ABC pullback here. And again, with the inflation data tomorrow, it could be an excuse. Just something to be aware of. Next, number 20, here's the Triple Q's KISS system. This is the high performance version, the daily. On the high performance KISS systems, we only have 2 dailies. We have the Qs and the SPY. All the others are intraday time frames. But anyway, no changes here. We had that new smart trailing stop yesterday, finally bumped up to 467. You can also see the moving average ribbon pinching there into the bullish configuration. Chart number 21, here's the 4 time frames. Again, similar look to the S&P. You can see on the 195 how price pulled back and held that ATR. Then we had a support cycle and rallied off of it. Now we do have a DeMark 9 here on the half day and the 78 minutes, so be aware of that. Chart number 22, here's the daily Qs. We've been showing this coil-like pattern up today, basically testing the late September highs there. And we'll see if we can blow through that or not. You can see how that last low price bounced off that demand zone. The Qs, of course, have not made new highs, unlike the S&P. Chart number 23, here's a half-day chart. It just shows you how we bounced off that demand zone. Chart number 24, here's 60-minute chart. So we had that ABC pullback into that gap. So one bullish view would be this is a wave 1, 2, and 3 of 5. But we'll see tomorrow. We're testing this area. We'll see how the market reacts to the CPI. And here's the 30-minute chart that I showed on Monday. Finally, chart number 26, here's IWM small caps, which continue to lag. Yes, they were up today, 0.2%, but they are underperformed the other indexes and are down for the week slightly. So they're still in this little channel that I drew last week. There's a larger demand zone. Again, as long as the market holds up here and continues, I do think this eventually will rally in this wave 5 that we have depicted. So that does it for the major indexes, guys. Check on futures. ES futures are down about 3 points tonight, so really not much movement here. And gold looks like it's pretty flat. Moving on, chart 27, here's the VIX volatility index. As already discussed, the VIX gave the buy signal on the S&P yesterday by closing back inside its Bollinger Bands. Remember, it closed outside its Bollinger Bands on Monday. So we had the VIX Bollinger Band buy signal yesterday. And if you took that, they gave you a nice, at least a one-day trade. You could see you had it there. And you could see all the past examples of that, of course. Chart 28, here's a 60-minute view of the VIX. We did fill that open gap on Monday, but by the way, we created another gap. Remember, the VIX loves to fill these gaps, just like the S&P, but especially the VIX really likes to fill the gaps. Notice there's another unfilled gap below. So if the market were to rally again from here, let's say it reacts positively to the CPI, maybe another target would be having the VIX come down and filling that gap. Moving on, chart 29, here's the high yield corporate bonds. Slight down today. It's below the 9 and 20 MA. You notice you have a 9 and 20 MA squeeze going on. So if we get more of a pullback here, notice there's a bigger demand zone down here, right around that 50-day moving average. Chart 30, here's the 10-year Treasury yield. Again, it's had a heck of a rally off the lows, that divergent low. So while the Fed has, cut rates a half a point, the 10-year hasn't cared. It has continued to rally. It is now slightly above the 38% fib retracement from the April highs. There's a supply zone up here, and you can see the 50% fib, 200-day moving average, etc. So the market's done pretty well here, considering that this is continuing to push higher. And chart 31, here's the weekly view. Again, so far it's up about 4 weeks in a row now, right off that big demand zone and potential completed ABC pattern. Moving on to the market sectors, chart 33, here's XLK Technology. So this rallied up today, almost filling this gap. That's been one of my main targets. Remember the last pullback, it found support in that demand zone and 20-day moving average. So right now, right well into this gap, almost filling it. Chart 33, here's the semiconductors. They were up today, but notice they're still stuck around the supply zone. They're not even close to that open gap above. Chart 34, here's healthcare. Big day today, up 1%. We'll see if that can follow through or not. Nice increase in volume. Chart 35, transports. Remember I showed this area, this important support area, uptrend line, moving averages. Well, we held that. Now we'll see if this can rally to the highs. Chart 36, here's the bank sectors. Remember, I labeled this as a bullish ABCDE pattern. Remember, coil patterns are 5 waves, and that was the bullish labeling. And banks had a good day. I also put out some trade ideas in this area, so let's take a look at those. Chart 37, here's FAS, that's the triple long ETF for the financials. This isn't the bank, but it's the financial sector. Nice coil, slightly breaking today. When I posted this in the morning on our trading community, it was well below this area. Chart 38, KBWB, there's a bank ETF. I posted this as well, little ascending triangle. I posted it before it triggered, and you can see it triggered today. Now we'll see if it can follow through, but definitely a bullish pattern here, ascending triangle, A, B, C, D, E. That's the bullish way to label it. And finally, KRE, that's the S&P Bank Regional Bank ETF. Another coil here. This is more of a symmetrical triangle instead of an ascending triangle. But so far you got a little higher low in here. And again, a lot of banks, financials are starting to report here late in the week. So we'll see how those come out. Next, chart 40, here's XLE Energy. Remember, this has had a pretty good rally, especially, with the storms that helped with the crude oil, but otherwise got quite extended after breaking through the downturn resistance line. You had a spinning top doji candlestick on Monday, then on Tuesday, big gap down. Now today it's recovering a little bit. Now, so far we only have 3 waves up here, guys. So there's a few ways to label this. This is it's either just a reflexive ABC, that would be the more bearish view. The bullish view would be a 1, 2, 3. You could also be a nested 1, 2, 1, 2, but we're not too early to say which one. But so far we only have 3 waves up. And Charter 41, oil services, same deal. Now this one is more bearish looking than XLE. Here you definitely only have 3 waves. That could have completed a simple ABC up, but we'll see. You can see it's been stalling at the supply zone. And obviously, anyway, let's go ahead and move on. And Charter 42, here's ExxonMobil. Remember a few weeks ago I put this out. It looked quite bullish. Broke out over a week ago. Spinning top doji candlestick on Monday, had a nice retracement. Hope you guys took some profits on that. But this pullback produced maybe another area to take some shares back. Got pretty close near the previous resistance, which became support. And finally, as you know, the Chinese market has been absolutely insane. FXI, that's the China ETF, had this inverse head and shoulder pattern. And then it just took off with China basically being like Japan, buying everything, buying their stock market, and just went absolutely nuts. Finally, yesterday had a big gap down. Again, you know it was due, well overdue. You were just wondering when. Finally, we got that yesterday and a pullback today. It's possible now this may be on target to tag the 20-day moving average. One thing I'd be watching here, guys, is I would look at an intraday time frame, maybe a 60-minute, maybe a 30-minute. What you likely need to see here is an ABC. That's a reflexive pullback in an uptrend. So right now we only have one move down. So this is likely wave A. So what I mean is you have a move down, then you get a bounce, lower high wave B, then another move down as a wave C. And to me, if you're looking to buy, that's your opportunity. If you buy in here, I think you need to trade it out. All right. I don't think it bottoms here. And Charter 44, here's the leveraged ETF. YINN. Our KISS system caught this. It was up 160%. But again, if you didn't take profits, you gave some of that up. The KISS system stopped out on the next day. Hopefully, anyone who was in that took some profits because that was just absolutely an insane move in 3 weeks, 160%. Same analysis applies on this, though. Moving on to commodities, Charter 45. Here's DBC. That's the index. You can see so far this week it's down 1.85%. It's basically in the middle of this horizontal rectangle pattern. It's been going on for about almost 2 years. Charter 46, crude oil, pulling back off the highs. You can see it's now down 1.5% for the week. It was previously up earlier in the week. Charter 47, UNG, natural gas. Once again, guys, look at this. Absolute textbook. This is now, I need to draw one of these boxes here. This is now the 6th stall at the 200-day moving average. Here, back here in June, back here in May, back here in January, November, and October. So that 200 moving average has been a player. So if you caught the long there, that was a good idea to exit your long, go short. And anyway, it's pulled back and it didn't find support at this extended horizontal line. So now we'll see if this can form a higher low. 50-day moving average is next. Charter 48, copper continues to pull back as well. Closing below the 20-day moving average today. Moving average ribbon, of course, is still bullishly stacked, starting to pinch. So we'll see if a higher low can establish. Charter 49, DBA, up this week, 0.7%. Again, it had a heck of a rally, made a new high. The ABC on the weekly played out, right? And we made a new high from that, got extended. Now it's bouncing this week. And of course, the bigger pattern was this cup and handle, which I pointed out in January and February of this year, and that played out for a monster trade. Charter 50, here's Bitcoin. This is the weekly chart, down 3.4% for this week. Bitcoin is not following the market, so that is something to be aware of, guys. It has been weakening here. Again, I still favor that low there is a wave 4, but this week so far, last couple weeks, it's been weaker. Okay. Now, speaking of the ETFs, here's BIDO, and again, it continues lower here. You got a little lower high. We'll see if that can hold or not, but Bitcoin for now continues to be weak. Again, ultimately, this needs to break this downtrend line to really confirm that up move. But right now, let's watch this area, see what it does. Charter 52, MSTR, one of the Bitcoin stocks. This gave a nice trade. Little pullback today, but it's held up very well. KISS system, by the way, has caught this nicely. Moving on, Charter 53, US dollar. up yet again. And look at these moves, guys. First off, remember, a couple weeks ago, we pointed out this wave completed pattern. Just textbook, 5 waves. Remember I said, anytime you see 5 waves up or down, start looking for some sort of reversal. We had 5 waves, we had MACD divergence. So this has produced a hell of a rally. Now, there's a big supply zone up here, but still has room. It's had a heck of a move. I think this may eventually produce that nice pullback in gold that we're looking for. So let's shift over to gold. Driver 54, here's gold. Again, weakening. It's testing this uptrend line here. But one thing, notice the RSI trend line is already broken. And I already said that would be a good trigger. So technically, you could be short or on gold, or you could have exited long just based on that trigger. Again, price is still holding this line for now. Breaking this, next target would be the 50-day and the next uptrend line. But overall, gold really needs a really nice correction just to work off some of this. So we'll see if that's in the cards or not. Chart 55, here's the weekly chart of gold. Again, it's went parabolic since the 2022 bottom. Remember, we favor this high as a wave 5 of 3. If that has been put in, maybe we'll work on this wave 4. But this may need some time to consolidate. This wave 4 could take weeks to play out, guys. Weeks. All right, if this has started. So we'll see. Ultimately, it'll be a buying opportunity because once that's completed, I'd expect a new move higher in a wave 5. But, again, if it's a wave 4, don't expect it to be done in 1 or 2 weeks, guys. Chart 56, silver, also been weak lately. Not surprising. And chart 57, again, don't lose sight of the bigger picture. Here's the monthly chart of silver. I do expect it to go much, much higher over time, but it may need to consolidate for a bit if gold decides to. Moving on to the mining stocks, chart 58, GDX. Last weekend, I talked about this topping candle, spinning top shooting star doji, and clearly that has produced a nice pullback. All right. So far, GDX down 1.9% this week. Chart 59, here's GDX on the daily. Remember, it also stalled at the upper channel line, and the stocks have been underperforming. It's now testing the 50-day moving average and a little uptrend line here. We'll see if we can get a bounce. If not, then you got a parallel channel line below. Chart 60, here's Dust. That's the double inverse ETF for the mining stocks. First off, back in late September, I pointed out this absolute textbook falling wedge. And this gave a great trade. By the way, guys, another educational comment. True wedges always have MACD divergence. If you don't have MACD divergence, likely your wedge is not complete. That's one thing we've learned. I don't know if that's even really discussed in a technical analysis book. That's a great example of the education you'll receive at Breakpoint. But obviously this played out and you got a higher low and it's moved up. There's an open gap up here, hasn't filled. Little pullback here late in the day, but still up today. It's been a nice trade. And chart 61, GGN. This is one of these gold closed-end funds. It gives a monthly dividend, and it's been great just to buy and hold. That said, the next dividend date is on October 17th. It did get quite extended here, a little RSI divergence. Moving on to trade ideas, guys. I'm not covering too much here with the market a bit extended and, with the CPI data tomorrow. So EOSE, remember this gave a great trade from 2 weeks ago. Hope you took some profits today, finally giving some back. But that coil worked out nicely. Chart 63, TTI was another one that worked out. The trigger was taking out the high of that. It triggered a couple weeks ago. Still looks okay, actually. Next, chart 64, OXLC. Here's another of these monthly dividend plays. This one pays a 20% annual dividend, guys, which is insane. But anyway, ex-dividend is on the 17th as well. Chart still looks okay. Chart 65, TWG. Now, instead of just talking about all winners, this was the long idea of mine on Monday. And this has produced a loser. Again, guys, this is part of trading. All right. So first off, yesterday, it gave you a day trade for those of you day trading. Resistance was 222, rallied up to 258. That's a good 10 or so percent, 12% move. right? But if you didn't sell it there, I understand most people aren't day traders. In fact, I don't do a lot of day trading. I like to do swing trading and trade the KISS systems. But if you didn't sell, likely you'd have been stopped out today if you use the 9 EMA as a stop. Again, guys, this is just part of trading. The reason I bring this up is because one of the subscribers brought this up. He tried this trade, and then he's like, oh, it didn't work out. I lost money. I'm just going to give up and go back to the systems. Guys, you can't look at it like that. That's emotion talking. Remember, trading, use the baseball analogy. It's not about your last at bat. A good home run hitter, a guy with baseball player with a good batting average. He doesn't worry about if he strikes out one time. It doesn't matter. It matters the collective average. Okay. It also, you need to have a plan, stuff like that. The subscriber also bought around 250, so he bought it well about 10% over the trigger point. So the risk reward wasn't good there. So again, guys, just things to keep in mind. And again, you're gonna have a losing trade. The best traders out there, might only have 60% winning trades. They have a lot of losing trades, but they make money because their risk is defined and they let their winners run. Okay? So don't focus on one little trade. And if you take a little losing trade, learn from it. Go review it. See if there's something else you can do. Look at your position size. Have a plan. Stuff like that. Good. Next, number 66, Lee cycle. One from Monday. It's still valid if it can clear this 240 area. Getting a little low price stock. And Charter 68 Rocket Lab, kind of a coil setting up. This has been having a heck of a move here. You can see it's been an uptrend. Every consolidation has produced a bounce. Right now it's on a coil. That said, this coil may need to flesh out for a while before it's complete. And Charter 68 RRGB Red Robin. I don't think I've eaten here in 10 or 15 years. Anyway, little resistance here. Again, guys, as far as trading is, like I said, there's not a lot of stuff showing out on our scan, so I don't want to force the issue. Again, let's see what happens tomorrow with the CPI. Have a wonderful evening, and if you're just seeing us on YouTube, I appreciate the support, and I hope more of you guys start commenting on the YouTube channel. It really helps the algorithm. And anyway, have a good rest of your evening, and let's see what happens the rest of the week. Take care.